Hey there, folks. Happy Friday to you. Happy Good Friday to you. Hope you're having a fantastic weekend. Coming at you with this week's market wrap video. We have a, we have some stuff to go over, not quite as much as we had last week, but from a technical standpoint, we were in a very interesting place. And our theme from last week worked out really, really well in the first part of the week. We talked about how maybe some of those hot sectors, the oil and gas, the metals and mining, we could see some money flow out of those and maybe flow into real beaten up sector, the IBB. And that is exactly what we saw for the first portion of the week. And then we had the Fed. We had several members of the Fed jawboning about potentially raising interest rates as soon as April, after a pretty dovish Fed meeting just a couple of weeks ago, right? So we saw the dollar strengthen, which actually got overdone to the downside. It got out of the Bollinger Band. We'll take a look at that in a minute. But let's start here at the S&P 500. This is where I want to begin. So listen, if you believe in technicals, and listen, we were talking about several areas of potential price resistance on this tremendous run that we've had. Several areas where we thought maybe we would see some resistance, and we just blew right through those on this pretty intense snapback that we've had in the markets. And here we are coming up into what could be perceived as a fairly logical place for the markets to have a pullback. Now listen, we don't necessarily have to have a big pullback in the markets right now. We do have some overbought conditions. We are coming up into potential resistance, but we could work this off through time. We don't necessarily have to have a big pullback. Now, one of the reasons why this video is coming out a little bit late today is I wanted to take a look at the GDP numbers and see how we might be set up for next week. Now, the GDP numbers came in a bit stronger than were anticipated. And this is a double-edged sword, right? This is kind of a good thing, bad thing. The good thing is that the economy is doing a bit better than people had anticipated. The bad thing is it kind of reaffirms that jawboning that we were hearing this week about potentially raising the rate as soon as April. So let's think about what happened the last time the Fed raised the rate. And it was only a quarter of a point, but they raised the rate in December. And what happened? We saw the markets tank for the last half of December and all of January and a good portion of February, right? So if we do raise the rates again, then that could definitely put some pressure on the markets. So if we look at it here, we basically have broken below this short-term trend line. We're coming up into price resistance right around 2050. We've got this trend line resistance. So it makes sense that we are pulling back. Now, the 200-day simple moving average is pretty important, right? If we break below the 200-day simple moving average, then likely we come down and test this area of price support. And if we lose 2,000, basically, we could see more of a pull. Now, I will tell you that I did start a position in SPXS. This is the 3-time bear S&P 500 ETF. Now, I got involved at $15.88 in anticipation of a $16 roll. It's a small position. I've been talking about for the last several weeks, build cash. This is a time when you want to start locking in some profits, building some cash so that you have some ammunition if the markets do roll over, right? And you want to lock in those profits that you have. So SPXS, I started to dip my toe. It's not a significant position. But if we get confirmation that we are rolling over and we do get a more significant pull, I will be looking to add to my SPXS position. So let's take a look at a couple of the other sectors, right? Let's look at the SMH, which also has had a tremendous run, right? We came down, we were in danger of breaking this long-term trend line here. We bounced off it significantly without looking back, basically, and we're coming up right into this trend line, which is acting as potential resistance. So again, logical place for us to have a pullback. Let's take a look at the Nasdaq. Coming up into resistance, we've got the 200-day moving average overhead. We've got some price resistance, right? Pulling back a little bit, we've broken this short-term trend line. Could we see a pullback into this 46.29 area? That's very possible, right? Could we pull all the way back and test this trend line? We could do that. I think we're going to get a clearer picture of which way the market is going to go next week. Let's take a look at the IBB, which we've been talking about for quite some time as being a sector that really needs to participate if these markets are going to move to new highs, right? So we did see a nice 3-day run in the IBB. We broke over this short-term trend line, but really the place that we need to take out with conviction is this 269. Actually, let's just call it 270, right? We need to take out 270 with conviction, and then maybe we can come up and see we'll see some resistance somewhere in this 286.50 area, which happens to coincide with the 100-day moving average. But you know, the IBB is dangerously close to breaking down below this longer term trend line here, right? And the 200-week moving average. So still, you know, the jury's still out on the IBB, but we did have a nice little bounce there. Let's take a look at the IWM. Okay, again, here we are, right? We've got some resistance overhead. We're sitting at really 110 is kind of acting as an area of resistance. Okay, so we're pulling back a little bit. We've broken below this short-term trend line. Maybe we get a pullback to 103 in this area. If we break below 103, let's just back this out for a minute. I want to take a look on the weekly. So this was our long-term trend line right here, right? If 103 doesn't hold, then potentially we're breaking through that long-term trend line again, and that could be painful for the IWM. So we definitely want to keep an eye on that. But again, you know, we're in an area where it kind of makes sense that we would see somewhat of a pull after the tremendous run that we've had. Let's take a look at the IYT, which is the transportation index, and we did break through this trend line here. We pierced through it, and now we're pulling back a little bit. We're testing the 200-day moving average, simple moving average. If we wind up losing that, we could come back down and test this trend line. Like, I'm not trying to suggest that we're looking at some kind of a catastrophic failure in the markets, but it would make sense for us to have a little bit of a pullback here. Again, so here we are with the mid caps, right? Let's take a look. Right at this trend line, we pierced through the 200-day, and now we've fallen back below it. So again, this does make sense as an area where we would see a potential pull and see some weakness. So let's take a look at what happened this week with the dollar. So, we had Europe break out the bazooka with their monetary policy, and everyone anticipated that that was going to send the dollar up into the stratosphere, and it did just the opposite, right? Caught a lot of people, but let's look at this. The dollar got out of the lower Bollinger Band and now has had a nice little snapback. It actually has broken back over this trend line right here. If the dollar continues to strengthen, we're going to see some more weakness. Most likely, we will see more weakness in gold and the miners. So let's take a look at gold real quick, which actually this is the first time we had a pretty significant breakdown in gold, right, over the last couple of days. Now, if the dollar weakens again, then we could see gold continue to move higher and resume the trend that it started here, and we could see it start to move higher. But for right now, gold is questionable, right? If you're in the gold and gold miners and you've got some nice profits in the sector, this is not a bad time to lock those profits in until we get more clarity on which direction gold is headed. Okay? If the dollar continues to strengthen, I think you're going to see some more pressure in gold and the gold miners. So be very careful in that sector. Let's take a look at this high yield. We broke through the trend line on high yield. Okay? We have had a tremendous run in the high yield. But now we've broken through this little trend line here. And we're retesting the trend line that we broke through, this long-term trend line, to the upside. If we break down below, we could easily come back down and test into this 79 area or potentially go lower. So there are just a lot of things that are pointing to a potential pullback. So, okay, so HYG, high yield, like I said, a lot of things out there that are indicating we could be in an area of a potential pullback. So let's take a look at the T2107, T2108. If you've been following me, you know these are two indicators that I pay close attention to. The amount of percentage of stocks over the 200-day moving average and the percentage of stocks over the 40-day moving average. Now, the one over the 200-day moving average, we're not at extremes there. The one that's been concerning to me is the fact that we have been over 70 in the 40-day moving average for a while now, and you know that when we get over 70, we're getting a little bit on the extreme side, and when we pull back on this, it can be fairly significant. So we've been at a high level here for a while. Seeing a pullback from here wouldn't be a real big surprise. Let's take a look at volatility. So, we've been talking about the fact that there has been literally no volatility. There's a lot of complacency out there. TIVX, UVXY, and the VIX have all been extremely low, and they will likely remain that way until we see some fear in the markets. Once you start to see some fear in the markets, these could be great vehicles for short-term trades during the day. Let's go through a couple of things here, a couple of sectors. We already talked about the biotechs. Let's look at the home builders. So, the home builders actually just had KB Homes, which reported a decent earnings report. We are coming up into the spring selling season. However, we've had a significant run in the home builders already, coming up into an area of price resistance, potential price resistance, right? Acted as support, now acting as resistance. We have broken this little trend line, seeing a little bit of a pull. We are, it looks like we've got stochastics heading lower. We'll see if this area holds up as support, basically about $32. So we want to see if 32 holds. If it breaks down below, maybe we come back, test 31.60, somewhere in that area. But again, looking a little bit tired, looking like we are in a place where we could see a little bit of a pullback. Let's take a look at the XLB, which is the materials sector, right? Broke over the 200-day moving average, simple moving average, uh, pulling back a little bit. Could be just taking a breather here, right? It's been a very hot sector. We'll see if it can resume this trend upward, or if the dollar continues to run. Like I said, you're likely going to see some weakness in the material sector. Energy, so we came up and we basically we pierced uh, this trend line, and look at where we're pulling back from, right? We're pulling back from this long-term trend line. A logical place for this to happen. We'll see if this area here can hold as price support. If it can't, then we may see a pullback all the way to the short-term trend line. And then if we lose that, it could get really ugly. Let's take a look at the financials, which again came up into a logical area of price resistance, right? Right into the trend line, into the 200-day. Let's see here. Actually into the 100-day moving average. The 200's up here, pulling back a little bit, right at this trend line. It's a logical place for that to happen. Take a look at industrials, which have been on a tear. We actually broke through the trend line here, and now we're pulling back. Looks like we may test this to see if it can hold as support, but the industrial sector has been pretty hot. So, if the dollar strengthens, that could be tough on some of the multinationals. So, something to consider there. If the dollar continues to strengthen, you could see this continue to pull back. Utilities have remained extremely strong, which is interesting because it's considered the safety play, right? Looking for high yield. We'll see what happens if the dollar continues to strengthen, and it's still a sector that I think you want to keep an eye on. It's had a pretty tremendous run. We'll see if that can continue. Healthcare remains a weak sector. We did have a nice little move higher, but it remains a weak sector and one that you probably have to be a bit cautious of. Consumer discretionary had a really nice move up. We've been pulling back. And actually it's kind of sitting right at the 200-day moving average. So we got, if we break below here, we could see it pull back to maybe the 75 range, right, where we could come into some potential price support. XME, the mining, right, broke above this trend line here. Now we're pulling back, also testing an area of potential price support, and trying to stay above the 200-day moving average. Oil and gas exploration. So oil and gas exploration, we broke over this long-term trend line, and now we're pulling back and testing it. We'll see if this acts as support. If this fails, right, and we break below, something to keep in mind, which just did a reverse split, is this drip. Okay, oil and gas exploration, bear, 3 times bear. They just didn't do a reverse split, they did a forward split, 4 for 1, right? So it was up here in the 50s, and now it's in the $13 range. So if oil exploration rolls over and oil rolls over, look at this drip for a potential opportunity. Now that it's in the $13 range, this could be an interesting area to play. So keep an eye on DRIP. And let's see what else we got. Retail basically pierced the 200-day moving average, pulling back, broken this short-term trend line. We'll see if this area, this $44 access support. If it doesn't, we could be looking at a pullback in the retail. So essentially, for next week, I think we're going to get more clarity on which way the market is going to resolve. We've had a pretty tremendous move in a very short period of time. Does not mean that we have to have a significant pullback. We could just chop around. Okay, it could just be a very choppy market. But keep an eye on the dollar. Keep an eye on volatility. Keep an eye on the S&P 500 staying above the 200-day moving average. Okay, I think there could be some opportunities on the short side if we do break down. That SPXS, I think, is a good thing to keep an eye on. DRIP, another one to keep an eye on. But right now, we're in an interesting place, a logical area for a potential pullback. We'll see how this resolves next week. I will be doing stocks to watch for next week on Sunday morning at 8 a.m. Now, listen, I know, you know what? That's Easter. I'm not going to do that. All right, here's the deal. I will be doing stocks to watch tomorrow morning, 8 a.m. Okay, tomorrow morning, 8 a.m. If you have stocks to watch or stock that you'd like me to take a look at, email me, tweet it to me, and I will try to get it on the Stocks to Watch Ticker TV live session tomorrow. If you can't make it, completely understandable. Holiday weekend. Enjoy the rest of your weekend. Happy Easter. Be safe. Have fun. And I will either see you tomorrow morning or I will see you all next week.